Alrighty, well, hey, good morning there, everybody. John here with Crypto Top 10, coming at you with some of the trending articles in the crypto news space. Got a nice lineup for everyone today, as well as, man, the crypto market just keeps booming. Thank God, right? Right off the bat, though, do apologize. Wife is asleep, so I got the baby monitor. I'm not going to be able to edit out every one of his coups, so I'll do my best, but I apologize if you hear something. So, starting things off, thanks to everyone who has subscribed wherever you're finding this content. And down in the description, if you check it out, there are links you can follow to check out all the articles we've talked about today. But let's hop on in and roll it. So, crypto fund Polychain just picked up 141 YFI or Yearnfinance tokens. This represents, I believe, an $8.2 million investment into the coin. It's actually an addition. The firm had purchased about 329 YFI last week, according to Masari researchers. The token's prices have doubled or jumped up by 100% since then. So they are injecting quite a bit of capital into this project. Yearn has emerged as the quintessential DeFi project in the past few months, with the token boasting no pre-sale to venture capital firms or investors, and its creator, Andre Crony, held no tokens at the time of issuance. He also said, hey, this is worthless, and yeah, it wasn't. So, but this did lead to a pretty positive narrative. You didn't have to worry about an exit scam from this guy because he didn't have anything to exit scam with. That combined with the usability on the Yearnfinance protocol with a multitude of use cases, token swaps, automated investment management, credit lending, loans, it's propelled YFI into one of the fastest growing cryptos of all time. I mean, I believe it hit about $42,000 from its $30 starting point. Yeah, so pretty insane. However, it didn't last long. YFI has kind of crashed back. But Polychain has picked up, this nice chunk of change, 470 YFI in total this month alone. So that's where you get the $8.2 million when you take the total amount that they have bought of the token. With YFI's pretty low supply cap of just 30,000 tokens, this makes Polychain Capital one of the largest holders of the token, boasting 1.6% of the entire supply, all purchased on the open market, which is pretty insane if you think about it. And I'm trying to see where they stand. And I mean, there's still people that are well above them, mostly other exchanges. Aave's lending pool, Binance's exchange, Binance's cold wallet. Binance has 3 different exchange wallets. They're holding the Weibo exchange. Sushi Swap's got some stuff. I mean, but still, 470 is definitely nothing. But this low supply definitely makes the token susceptible to wild price swings. Yeah, they went from that all-time high of like 42,000 back down to 7,300 and then up to 17,400, all in just a few month periods. So it keeps moving. However, that doesn't seem to faze investors. There's a host of new upcoming features for Yearn. Lower fees. They're talking about supporting staking for Ethereum 2.0, which I believe I talked about yesterday. And the purchase of decentralized options. It's kept demand pretty high and the hope for returning to that all-time high up. Well, at least until, eventually things cool off, as they always do. Keep that in the back of your head, even as you applaud the great gains we've seen. But yeah, let's hop on over. So Polkadot, specifically the Moonbeam project on Polkadot, is planning to set up a custom parachain that will emulate the Ethereum virtual machine environment, effectively recreating Ethereum on Polkadot. Now, developers on Polkadot and some other interoperability projects usually need to set up an entire blockchain to host their decentralized apps. While Polkadot's substrate framework is intended to make this process similar, not all decentralized applications need that level of control. So Moonbeam is trying to become this Ethereum emulator for Polkadot on Polkadot, using the same virtual environment that is currently powering all the smart contracts on Ethereum. Polkadot is stylizing itself with the use of these parachains, so parallel blockchains that can operate in conjunction with one another. Very, very interoperable. A lot of bridges going back and forth. It's kind of their thing. So Moonbeam seems to be picking up on this, running with it, and trying to tie in Ethereum a little bit more. So this is going to allow Ethereum dApp developers to make only minimal changes to their code and maintain the use of developer tools like Truffle and MetaMask. At the same time, the integration with Polkadot would allow for easy interoperability with the rest of the Polkadot system. So you get all the benefits of Ethereum, but the parachain support from Polkadot, I mean, it seems almost like a win-win if you ask me. But, competition and dApp scalability. There's a lot of people trying to prove that they're the best solution. There's multiple layer chains that compete with Ethereum's native 2-layer solutions. DeFi has pretty much been an Ethereum-dominated thing, but it can only do so much, hence the Ethereum 2.0 Phase 0 rollout. So things like Moonbeam, Polkadot, Tron, and other blockchains are looking to capitalize on the limits of Ethereum by providing these alternative platforms. Binance is doing it, Solana, Near, Cosmos, all these different things. Moonbeam's launch date is expected for Q1 of 2021. So it's coming down the pipeline fairly quick. Happy to see it. Good for Polkadot. Let's hop on over to Ethereum, though. We had an interesting little snafu happen just a few hours ago, actually. So, Ethereum's network infrastructure and API access provider, Infura, reported an extended service failure. Yeah, in fact, some people are calling this an unannounced hard fork. Don't panic just yet. Let's get into it. They published the report at 8:12 UTC on November the 11th, attributing the cause of the malfunction in several components of older versions of Ethereum's Geth client. Basically, Infura was running an older version, so they determined that Ethereum client components that operated with versions after 1.9.19 weren't affected, and they were able to identify the root cause of the problem, and a solution was prepared to restore the service. However, currently, it's still ongoing. Infura's page has a major outage in Ethereum's API, mainnet data archive, mainnet filters, mainnet logs, mainnet WebSocket, and mainnet HTTPS API. Therefore, there have been pretty significant failures in Infura's price feed that have affected places like Binance, Upbit, BitHum, and Crypto.com, MetaMask. Even some DeFi applications could have been affected by this as well, depending on what version of the software they're running. Binance's CEO Changpeng Zhao confirmed via Twitter that withdrawals for the mentioned assets have been re-enabled. However, user funds were not affected by the failure, which is pretty good. He did make a peculiar report of the situation, stating there's a possible Ethereum chain split at block 11234.873. Etherscan and blockchain are showing two different chains and data after that block. Apparently, at the height of this block, Ethereum developers introduced a change into the code. This caused a chain split and a subsequent failure of the Geth client if you were using an older version. The crypto community criticized Infura and the companies that were not aware of the upgrade. These entities were stuck in a, quote, minority chain, unquote. However, it was technically an unannounced hard fork. In fact, something similar happened to Bitcoin about 7 years ago. They did a database upgrade, and it caused a similar situation. Look, some people are kind of split. Some people are blaming Infura about not updating their software reliably, and some of these other places that cause these outages. On the other hand, these larger developers, places like Infura, aren't always going to jump to the newest version right off the bat in case there is an issue or a bug in that code. So not having that code be backwards compatible with older versions, or not making it very clear before you upgraded and introduce changes into the code that, hey, this could break things. There's multiple people at fault here. It's not just one person. So, yeah, again, Not something anyone needs to panic about. It looks like most of the problems are behind us, though they're still working behind the scenes to get everything back up and running. Most of us probably won't even notice the hiccup. And it's nothing to do with Ethereum itself, more so that some of their providers weren't running the newest version of the software and some of the developers weren't communicating clearly about what they needed to do. So let's hop on over. So I don't know if you guys remember this, but old Akon, yeah, that guy, the Senegalese R&B singer, rapper. I'm going to get called out. I don't pay attention to music very much. Is developing Akoin, and he's actually rolling it out in a Kenyan tech city in the first step to what will be the Akon City, which is a smart city he's hoping to establish in Senegal. So it's going to be launched imminently in the $2 billion Mwali Medical Technology City, or MMTC, in western Kenya. It's a newly built city, which is centered around state-of-the-art medical and technology complex. It would seem pretty much an ideal proving ground for the currency ahead of it becoming the official currency of Akon City, which is currently under development in Senegal. I'm very interested to see how that develops. Africa is going to be the emerging marketplace of the decade and possibly the following decade. So, well, the initial rollout for this is going to be invite only. They're projecting to see about 30,000 transactions over the course of that month through the implementation of Atomic Swap, merchant services, and an Akoin debit card. By mid-2021, a wider rollout to about 3,500 residents, workers at the 5,000-bed Hamptons Hospital, and 2,000 merchants is forecast to increase the services volume to about 1.5 million transactions per month. Basically see how it's doing in the pilot program, and then they'll roll it out to a larger group and see how that is going as well. It actually marks the first step towards a pretty ambitious push for an increased usage of cryptocurrency throughout Africa and potentially spiraling out to the rest of the world. Yeah, it's pretty cool. Crypto is such a weird space. You have a American Senegalese musician testing a cryptocurrency in a tech hub in western Kenya to prove that it works while he's building a city in Senegal. I'm just glad it seems to be working out for him. So that's your Akon City Akoin update for the month. We'll check back in probably in 2021. Yeah, so let's hop on over and gotta talk about the IRS. So yeah, IRS. So the Tax Law Office of David W. Claysing, which is a boutique California tax firm, so cultured, has issued a public release warning investors that the United States Internal Revenue Service is getting serious with Coinbase users. So the firm's dual licensed tax lawyers and capital allowance specialists, again, so cultured, say that they have been tracking an increase in IRS enforcement activity against Coinbase users who fail to comply with their tax and reporting requirements. Evaders can end up facing serious civil and criminal trouble down the line. Probably mostly civil unless you're swiping hundreds of thousands of dollars. Normally the IRS is going to give people a pretty stern slap on the wrist and make them pay it back. Coinbase released a transparency report this October, which the law firm says should serve as a major wake-up call to the exchange's users. The report showed clearly that both the IRS and its Criminal Investigation Unit, as well as the FBI and CIA, were filing information requests with the exchange. The uptick in this enforcement activity against Coinbase users who dodge taxes would appear to confirm that the exchange is cooperating closely with federal authorities. Now, guys, can't be mad at Coinbase for doing this. They are a licensed business in the United States, and for them to continue doing business, they have to comply with things like this to the limits that the law mandates that they do. It's not their job to decide what that is or isn't. It's their job to comply. Now, again, pay your taxes. Most of us in the United States have probably used Coinbase at one point or another. I do use it. I actually use a crypto tax software as well. that I link with my Coinbase, my Binance, and several other exchanges, as well as several other wallets. And it kind of compiles everything and tracks it together, so that way I'm paying my taxes and I'm paying them correctly. If I sell things for a loss, I'm able to prove that I sold it for a loss and claim the credit. If I sell things for a gain, which I don't normally sell things for gains, I can know whether it is long-term or short-term and the tax rate on it. I highly, highly, highly suggest all of you guys do this. I know it stinks. I know it sucks. But they're going to be looking at this stuff more and more and more as time progresses and as crypto usage grows. The last thing you want to do is to dodge taxes for 5-10 years on crypto and then get a very large bill from the IRS you may or may not be able to pay, and possible criminal penalties as well if they can prove that you did it maliciously or you fail to pay them back. Be safe, do your thing, start now. And that's all I can say. Start now. I've been doing it since I started buying and selling cryptos heavily in 2017. It's really not that bad. Honestly, guys, just pay your taxes. All right, let's hop on over. A little update on the KuCoin exchange. For those of you who don't remember, it was hacked back in September for $281 million. KuCoin CEO Johnny Liu tweeted today, so far 84% of the affected assets have been recovered from this hack via approaches like on-chain tracking, contract upgrade, and judicial recovery. As asked by law enforcement, we will publish all the details once the case is closed. Pretty nice. It stinks that they were hacked, but it's great that they were able to recover such a large portion of the funds through a variety of different means. KuCoin has resumed full service of 176 tokens, and all others will be reopened by November the 22nd. So KuCoin users should be happy. They should probably start seeing the ability to withdraw all funds and all that type of stuff. He wanted to thank all the individuals and institutions who helped, and that together KuCoin will build a stronger community. Yeah, just a nice little update. I'm glad they seem to be recovering okay. Hopefully they're implementing some pretty robust security measures so this doesn't happen again. The hackers have been identified, or they believe they had, and they're working on all that fun stuff. So we could potentially see this $281 million be recovered in the 90 to 95 percentile. Pretty darn nice. And then to wrap things up, but definitely not least, in a press release, Hong Kong-based exchange Fusang has announced cooperation with the world's second largest bank, the China Construction Bank. The corporation aims to make a public offering of debt security on the blockchain. That's right. The CCB will be issuing an estimated $3 billion worth of bonds. Trading will begin in 2 days' time on November the 13th, and the bonds will be purchasable by Bitcoin. Dear Lord, you can buy bonds with Bitcoin. This is just another awesome example of adoption spreading. Now, the bond will give investors deposits insured by the banking institution with returns of 0.7%. Now, I don't know why anyone would buy this with Bitcoin to get a 0.7% return when it's looking like you could probably get 100 to 200% returns on Bitcoin right now. But I'm not here to judge. The product will be part of an initiative by the Regulatory Authority of Labuan, Malaysia, to promote a digital transformation, which I can definitely get behind. This is mostly an interest story more than anything else. It's great that banks are starting to open up and allow people to buy things with Bitcoin, but I don't know why you'd be buying these notes to get a 0.7% return, but what you gonna do? But that will wrap things up for the trending articles in the crypto news space. Let's take a look at the top 10 coins by market cap. Everything in the top 10 is in the green. It's quite beautiful to see. Not counting Tether. Let's see. Bitcoin's up 4% on the day. Ethereum's up 6%. Chainlink is up 4.55% on the day. 34.5% on the week, $13.22. Good for Chainlink. I'm glad to see them rebounding. Hopefully they'll be retesting that $20 mark soon. Cardano is up almost 18% on the week. Like, everything is doing really, really good. I like to see that both Ethereum and Bitcoin seem to be consolidating nicely at their levels, the $15,000 range for Bitcoin and the 450 to 470ish range for Ethereum. I'm very excited to see how the rest of the week shakes down. Everything seems to be on the up and up. I expect some pullback to happen before we launch higher, but I don't know when that will be. If you're investing in Loopring, congratulations. It's jumped up 34.31% in the past day, which is pretty darn nice. On the flip side, Decentraland is down 9.65% on the day. Aave is down 9% on the day, but don't worry, it's still up 127% on the week. No big deal. So that will do it for Crypto Top 10. My name is John. Please hop on down to the description, follow that link, and check out all the articles we've talked about today. Do your own research. Don't just listen to what I or anyone else says. And finally, thank you to all those who have subscribed. And if you haven't subscribed yet, hit that button. Because, I mean, come on, you made it to the end of this video. Why not? All right, that'll do it. Peace.